Well, today we are here with Mr. Wasif Latif from Victory Funds. Mr. Latif has been with that fund company since 2006 and has over 20 years experience in the industry. He is uh, head of investments for the Victory shares and target date solutions. And well, welcome. So glad that you're able to speak with us today. Um,
Thank you. Appreciate it.
Would you just spend a few seconds telling us a little bit about yourself and your role?
Yes, absolutely. So I'm part of the Victory Solutions team. I'm head of investments and have been in the business for over 20 years. Have done a lot of asset allocation work in that time frame. So managing a lot of balanced portfolios, diversified globally between stocks and bonds around the world, and continue to manage our target retirement funds, our target risk funds, and do a lot of asset allocation work, as well as picking a lot of managers within our portfolios. Once we pick the asset allocation of what to allocate to, how, where to allocate to, then we pick the vehicles on what vehicles we pick to use to make that allocation. So if it's a mutual fund or an ETF or individual securities. So I've been doing that for over 2 decades.
It's a long time. Time does fly, doesn't it? Well, 2020 has been an exceptionally interesting year, to say the least. Um, do you have any thoughts on what's gone on in 2020 in terms of the market and investing?
Yeah, absolutely. So it's undoubtedly a year for the history books, not only because of the pandemic, but also because of what we experienced in the market with the level of volatility. So the drop that we saw in spring was unprecedented, all the way down to the bottoms on March 23rd. But more interestingly, the rebound itself was also unprecedented. So I think we've seen the quickest market drop and rebound in history, given the enormity of the moves. And a lot of it goes back to the credit goes to the Federal Reserve stepping in and providing a lot of liquidity and stability to the market. And I think once that stability was there, the market began to look through towards the future and saying, when will we begin to renormalize? And obviously, throughout this year, that's been the biggest question for the market. And I think the thought process come summertime had been, we will get through this at some point. It may take us a year, it may take us 2 years, but at the end of the day, we will get to a place where we will begin to renormalize. And in the meantime, while we wait to do that, the central bank policy, as well as the fiscal support that has happened and may be coming as well, will hold us over and bridge us till we get back to normal. So that's been, in my eyes, the story of 2020. Obviously, as we're ending the year, we're seeing the positivity around the idea that reflation may be occurring towards the second half or the end of next year. And that's on the back of the good news coming out of the vaccine, as well as the continuing support from the monetary policy, as well as, despite the fits and starts, the fiscal policy as well.
Wow. You've not only answered 2020, but you led right into 2021. Is there anything s- more specific that you're looking for towards in 2021, things that you think might happen, um, whether it's because of the vaccine or COVID or just general economics?
Yeah, absolutely. So I think the interest rates being at such a low level still indicate some degree of either trepidation or concerns in the marketplace. And they also talk about the high levels of the low growth environment that we may still be facing going forward. So as an asset allocator, when I'm picking securities to put into our portfolios, both on the equity side and the fixed income side, interest rates become a very, very important component, not only on the fixed side to what is the level of income we can earn, but also what is the degree of stability that will be in the portfolio if there is another bout of volatility. Because as you know, in an asset allocation portfolio, the fixed income portion provides two functions: income as well as stability in the portfolio when there is market volatility on the equity side. And so as we move forward into 2021, in our portfolios, we're looking at the level of interest rates and saying they're pretty low. Given the collapse that we saw in interest rates coming
Yes.
into the market sell-off, they haven't rebounded fully to where they were prior to the sell-off. And while they've nudged up a little bit, you're still under 1%, and they're bumping along the bottom, which provides a challenge to us as asset allocators because we do need to generate a degree of income, but also, as I mentioned earlier, provide stability. And if we get a economic environment where there will be a renormalization and there will be some reflation, there could be some upward pressure on interest rates as that process begins to unfold. And so that could be a headwind for interest rates and fixed income type of portfolios. So what we're looking at in our portfolios is looking at strategies that can be uh, cushioned or are indifferent to a rising rate environment, such as floating rates. Floating rates provides a good type of a fixed income allocation. You're getting an income, but you're also getting paid to wait in case there is a rise in interest rates. So it's a good strategy that we have in our portfolios. I think of it as akin to an adjustable rate mortgage when I'm describing it to people who may not understand what it is.
Mhm.
It is something, but on the other side, on the owner side, as the owner of the security. So if rates do rise in the future, next year or even further out, a strategy like that can help mitigate the negative impact of rising rates, but also continue to provide some good current income. So that's what we're thinking on the fixed income side.
Super. Well, thank you so much for taking your time and spending some time with us today. That's very informational, very helpful, and we appreciate your taking time out of your busy day. Thanks, and have a great
Absolutely, my pleasure.
and happy holidays to you too.